Bitcoin's dropped nearly 50%. I'm Sats. Let's make sense of the dip. Right, let's start with the facts. No drama, just what's happened. Bitcoin peaked at just over $126,000 in early October 2025. Since then, it's been falling steadily. In early February, it briefly dipped below $75,000. As of this week, it's sitting around $67,000. That's a drop of roughly 47% from the peak. Now, if that sounds catastrophic, I want to give you some context. Bitcoin has done this before. Multiple times. In 2018, it fell over 80% from its peak. In 2022, it fell about 75%. And after both of those crashes, it came back and hit new all-time highs. That doesn't mean it will definitely do it again. Nothing in investing is guaranteed, but it's worth knowing this pattern exists before you assume the sky is falling. So that's what's happened. Now let's talk about why. There are three things working together to push the price down right now. And none of them are Bitcoin is broken or crypto is dying. They're more boring than that and actually more reassuring once you understand them. First driver, institutions are selling. When Bitcoin ETFs, exchange-traded funds, launched in the US last year, it was a massive deal. Big institutions, pension funds, investment managers, they poured billions into Bitcoin through these ETFs. That was a huge driver of Bitcoin hitting that $126,000 high. But that money has started to flow back out. Billions have exited Bitcoin ETFs over the past several weeks. When large amounts of institutional money moves out of any asset, stocks, gold, Bitcoin, the price drops. That's basic supply and demand. More sellers than buyers, price falls. Second driver, the wider stock market fell and Bitcoin fell with it. In early February, US tech stocks took a serious knock. Microsoft's earnings disappointed. Tech indices dropped sharply. And when traditional markets sell off, Bitcoin tends to sell off too, because a lot of the same investors hold both. When people get nervous and want cash, they sell their riskier assets first. And Bitcoin is still seen as a risk asset by a lot of institutional investors. This is actually one of Bitcoin's limitations at the moment. It's often talked about as digital gold, a safe haven you'd run to when markets get rocky. But in practice, right now, it tends to move more like a tech stock than like gold. Gold has actually held up better during this period. That's a nuance worth knowing. Third driver. Forced selling made it worse. Here's a thing that not many beginners know about. Liquidations. Some Bitcoin traders borrow money to buy more Bitcoin than they can actually afford. This is called leverage. When the price drops past a certain point, their positions get automatically closed and their Bitcoin gets sold, whether they want to or not. This is called a liquidation. Over $2 billion in leverage positions were liquidated in just a few days in early February. All of that Bitcoin hitting the market at once pushed the price down faster and harder than it would have dropped otherwise. It's a bit like a snowball ant. Once it starts rolling, the forced selling makes it roll faster. So, institutional outflows, a wider tech stock sell-off, and cascading forced liquidations. Those three things together explain most of what's happened. Now I want to address something you've probably seen in the headlines. Some people are calling this a crash. Some are calling it a temporary correction. Some are predicting Bitcoin goes to zero. Others are saying it'll hit $150,000 by the end of 2026. All of these people are speaking with way more confidence than the situation warrants. Here's what I think is actually honest. Nobody knows. I don't know. The analysts don't know. The YouTubers who confidently tell you it's going to $200,000 don't know either. Anyone who claims to know where the Bitcoin price is going short term is either mistaken or trying to sell you something. What we can say is this: the fundamentals of Bitcoin haven't changed. The network is still running. The 21 million supply cap is still intact. Institutional infrastructure, the ETFs, the regulatory frameworks being built, is still developing. The fear and greed index right now is sitting at extreme fear, around 13 out of 100. Historically, extreme fear has often, not always, but often preceded periods of recovery. Whether you see that as a buying opportunity or a reason to stay away comes down entirely to your own situation, your timeline, and what you can afford to lose. And that brings me to the most important part of this video. Right, practical question. Given everything we've just covered, what should you actually do? If you don't own any Bitcoin right now and you're wondering whether to buy, there's no right answer. What I'd say is, if you're interested in Bitcoin, a dip is historically a more sensible entry point than an all-time high. But only if you're buying something you'd be okay holding through further drops. If Bitcoin fell another 30% from here, would you panic sell? If yes, either wait until you're more comfortable or only put in a tiny amount you genuinely could lose entirely. And if you already own Bitcoin and you're watching the price fall, the worst thing most people do in this situation is panic sell at the bottom. That locks in your losses and means you miss any recovery. Unless your personal financial situation has changed and you genuinely need that money, sitting tight is almost always the move that people look back on more favorably. I know that's easier said than done, but it's true. And if you've never bought Bitcoin and you're watching this thinking, I can't afford to get involved right now, that's completely fine. Understanding what's happening is valuable in itself. You don't have to be in it to follow it. This channel will be here when you're ready. The one rule worth repeating: only ever invest what you'd be genuinely okay losing entirely. With Bitcoin at any price, on high or low, that principle doesn't change. If that number is 0 right now, that's a perfectly valid answer. Right, let's wrap up. Bitcoin has dropped around 47% from its October 2025 all-time high. The main drivers are institutional money leaving Bitcoin, ETFs, a broader tech stock sell-off pulling it down, and forced liquidations making the drop sharper than it otherwise would have been. None of that means Bitcoin is broken. It's done this before and recovered. But nobody can tell you with certainty what happens next. What you can control, how much you have in, whether you can afford to hold through volatility, and whether you understand what you're holding and why. Get those 3 things right, and the price chart gets a lot less stressful to watch. Thanks for watching. If this helped you understand Bitcoin better, consider subscribing. I'll see you in the next stack.